If you think sustainability is only about carbon and climate, then I would encourage you to think again because today we're exploring why the financial access is a sustainability infrastructure issue. My guest, Tamara Laine, is building fintech tools that give millions of overlooked workers a pathway to equity. And her journey from Emmy award winning journalist to CEO reveals what every business leader needs to know about the S in ESG, which is the social aspect. So stay tuned. This conversation could change the way you think about sustainability.
Well, the right to thrive is a human right, right? And if you don't have financial inclusion, then you don't have many of the things that you need in order to thrive, which is housing, food, economic mobility. And so when we look at that, when we look at financial fluency, financial inclusion, these are the foundations of what people need in order to build better lives or survive. So, as something that I've always been passionate about, I've tried to find different ways to solve it throughout my career. So in journalism, I was always looking to highlight these as stories. Then I went on to be on the board of a foundation where we were looking at financial fluency. And over these years, I saw there was a lot of scattered problems, but one of the main issues that people were having is it's one thing to learn financial fluency, which is essential, right? But the next thing is basically access to capital. And that's where the system gets incredibly tricky to navigate.
Welcome to Sustainability Transformations podcast, where we explore bold ideas to drive positive change for people, community, and business. And today we are joined by Tamara Laine, Emmy award-winning journalist and technology executive and the founder of CEO of MPWR, a fintech company reimagining financial access for gig workers, women, and underrepresented communities. Tamara has led 8-figure ventures, investigated systemic issues like human trafficking in a journalism career, and today is building financial tools that combine AI, alternative data, and human-centered design to unlock opportunities for millions excluded from traditional credit systems. So she's here to help us unpack how this financial infrastructure isn't just an economic issue, but a core lever of sustainability and equity. And so the goal of our conversation is to explore how these inclusive financial systems are essential for ESG, which is the social aspect, why equitable access is a sustainability infrastructure, and what corporate leaders can learn from entrepreneurs who are tackling these significant systemic exclusions. Tara, you've had such a unique journey from Emmy award-winning journalist to founder of a fintech company. What was the turning point where you realized that the financial equity and sustainability were inseparable and needed a solution that you are providing yourself?
Yeah, I mean, it seems like a non-linear thing, right? To go from being an investigative reporter to being a fintech founder. But actually, it makes perfect sense because as an investigative journalist, what I did was I spotted problems. I looked deep into problems, I talked to people, and I really saw what was driving the things that were making their lives challenging, right? Whether for me as a journalist, whether that was an environmental contamination, it was political injustice, or it was financial exclusion. Those years working in journalism really taught me how to identify, and then really the years after that was how to solve a problem. So it seems like it doesn't go together, and then when you look at it that way, it's like, wow, how perfect of a career path could I have asked for? So, I actually I strayed from your question. You said, what was it like going from investigative journalist to technology executive? It makes perfect sense. It connects perfectly.
Yeah, that's great. Thanks for that intro. So generally in sustainability is biased with energy, climate change, but we talk less about access to finance being quite essential. And in fact, when you look on the World Bank web pages, which talks about developing countries or developing economies, one of the key things they look at is access to finance for women, for children, or underrepresented groups. So why, in your view, is financial inclusion part of an essential sustainability conversation?
Well, the right to thrive is a human right. right? And if you don't have financial inclusion, then you don't have many of the things that you need in order to thrive, which is housing, food, economic mobility. And so when we look at that, when we look at financial fluency, financial inclusion, these are the foundations of what people need in order to build better lives or survive. So, as something that I've always been passionate about, I've tried to find different ways to solve it throughout my career. So in journalism, I was always looking to highlight these as stories. Then I went on to be on the board of a foundation where we were looking at financial fluency. And over these years, I saw there was a lot of scattered problems, but one of the main issues that people were having is it's one thing to learn financial fluency, which is essential, right? But the next thing is basically access to capital. And that's where the system gets incredibly tricky to navigate. So, I mean, our financial system has been around centuries. Finance has been around for a long time. Who's included in that has definitely been just a legacy of exclusion. And what I can speak to and where most of my time goes now is looking at the system that was set up post. And so most of our financial systems that we use in the US, for example, really the main pipes of them started in the 90s and then have been growing since. And it's created, obviously, a really robust global system that works for some, right? It works really well for some, but it was set up at a time before women had access to bank accounts, right? It was set up before there was equality to everyone in the US. It just shows you how far we've come in these years, but yet the financial system is not necessarily caught up. And so that's where I got really intrigued because as a technology founder who's helped launch other companies, I went, well, how can I utilize my skills to solve this problem? And with the obviously explosion of AI, now we really have an opportunity to reimagine and rewrite this system to include more people because we have the ability to create new algorithms of, for me, it's credit risk modeling, right? And the ability to teach people financial fluency in a easier, more tangible way that's personalized to them. So we're at the cusp of being able to do some really great things when it comes to inclusion. We just have to think more broadly and in what I'm very passionate about is ethically and do this in a way that's transparent and with the bottom line is doing no harm. So as we create these new systems, we have to imagine them in a way that are for everyone, not for the few.
It's true that the capitalist system has been established for a long time, and no doubt. But when you say the system, perhaps if we can break down that system a little bit to see where in that system is it at the bank level that most of us are familiar with that we bank with, or is a few layers between the banking system and the front line? So perhaps if you can unpack when you say the system, which we know it is a capitalist system, but not all of us have the financial understanding. So maybe you can help to unpack where in that system that there are fundamental challenges or the MPWR is actually operating in.
Yeah, and so I created Empower, which is MPWR, but it's without the vowels. But I think Empower, we're going to empower all of us and empower your money. When I think about the system, I currently think about it a little bit different. I don't think about it as banks are doing something that's not accessible at the moment or regulations are not doing something. I think of it as like the piping in your house. And so I currently live in a house that's 300 years old, right? And when we look at our piping, it's like you've got the piping from the original house and then you've got like the fix that was, a few years later. And then 50 years later, there's a new type of pipe that was put on there. And then you've got copper and you've got plastic and you've got all these things that are just tacked together that make up the current system in my house. And that's the way I feel about the financial system because technology has really grown, right? Since the 50s and how the financial system works, the algorithms work, the systems that transfer money, right? And so we're in really a prime time right now to recreate those so that we can do things. I mean, you're looking at cross-border payments that are becoming easier, right? And 10 years ago, cross-border payments were incredibly challenging. So like the technological advances that are happening, it's not one thing that's a problem. It's kind of like you've got to start looking at the whole system and saying, how can we help it to become more intuitive, easier to use, and smarter?
Yeah, that's good. So the initiatives that Empower are involved? Is it training? Or is it access, or is it affordability? What are the core initiatives that Empower are involved?
So what we're trying to do at Empower is to expand access, right? So I specifically focus on the gig economy, and the gig economy in the US is about 80 million gig workers. It's nearly half of the US working population is now gig workers, which are people that don't make a W-2. And that number is growing. And globally, I think the last number that I saw was something like 450 million gig workers. And that the global number doesn't include a lot of people in the informal community. So we're talking about like the gig economy globally is enormous. The gig economy in the US is exploding in numbers. And so we are focusing on the workers who have consultants, gig workers, drivers, Uber drivers. Those people have a very difficult time accessing credit and capital, right? Because when you have a W-2, you're showing a consistent paycheck. When you have gig work, you have inconsistency, right? You have seasonality. You have maybe lack of a track record for payments. And all of those things are risky. But with the technology that we have now with AI and where we can look back and how accessible it is to pull up this information, if you've got the right way of sorting through it, we can actually solve that access to capital problem for people who maybe were more traditionally risky because we can show better information. We can show holistic pictures versus what, in the past was a very simplistic picture of someone based on just a few numbers. I think that's what's really exciting is that data can expand our ability to create access if it's done in the right way and if it's done transparent and with the right security protocols and ethically, and we include non-biased ways of creating the algorithms.
You've shared access, women, caregivers, gig workers. But from the financial institution side, how is the uptake, the acceptance of these new ideas? Are they open to these new ideas? Not necessarily new ideas, but improved systems.
Well, I mean, I think it's both, right? Like, so we're still in the development. We're nearly done with developing our V1, and the system or the institutions that I've been talking to are extremely receptive to it because this is a huge population that up until now that's been hard to access, right? And so what they're excited about is that there is a new way to reach customers and find loyal customers, right? This is a new way to help people with their financial fluency build and grow and thrive in the economy. So the banks that I've talked to are very excited, but there's still hurdles, right? Like we need to make sure that the regulations are in place for AI, and these are things that we're still working through. It's always whenever you're bringing innovation into a legacy system, you have your great opportunities and you have your great challenges. And I think, they come together when you're doing something exciting.
You've talked about new ways of seeing these challenges and opportunities at the same time. But how do you rethink the risk, as you mentioned, the stability of someone getting a consistent paycheck over a long time with the gig economy? So, how are banks expected, based on these discussions, to rethink risk and credit in a sustainability lens?
Well, I mean, what we're working through is obviously you've got the traditional risk models that work for the banks. And so you can't exclude those, right? What you want to do is you want to add on top of them. So the way we view this is that we take the original, kind of credit model, and then we say, what can we add that creates a holistic picture of this person? And how can we do it in a way that turns kind of I'm going to say turns the power, turns the knowledge over to the user, the person who's that data belongs to, right? So how do we do it in a way that says, hey, you should know exactly what goes into your credit score and how to make it better? And so how we're creating our platform is that the user actually connects all of the systems, all of the information that goes into the credit risk analysis so that they know, hey, I'm plugging in this is what it's used for, right? And this is part of transparency in AI. This is what it's used for. This is what we're looking for. And then when the risk profile comes up and it comes up with, what your rating is, it also tells you why and how you can do better. right? How you can improve so that exactly what you need to do in order to hit the marks that you want to hit. Right now, with most of your scores, it's a little bit of a black box, right? Oh, and people can pull them without you knowing. It's very much a system where your data is somewhere else. And I personally believe that like data should belong with you. You should be able to say, like, I'm willing to give my data to this person, or now that I have a full understanding of what's creating this score, I can fix this in a few months. So yeah, that's the way we view it.
In reporting generally in sustainability, one of the reporting frameworks, ESG, of course, which is very popular, environment, social, and governance. Now, when it comes to environmental reporting, it tends to be easier to measure the greenhouse gas emissions, air quality, the ecosystem, and so on. But when it comes to the S of the social, which is about the people, workers, and employees, from productivity, you name it, but in this particular field of access and equity, what are financial institutions or companies missing when they fail to measure effectively these access and equity as key performance indicators?
Ooh, that's a big one. So let me make sure that I'm answering the question that you're asking, because that's I think a question that a lot of people struggle with. So how should institutions look at measuring this in order to be more, I mean, there's the simple way, right? Which is, so baseline numbers, right? If we look at the US and there's 80 million gig workers, recent reports that have come out by like Samsung showed that 6 out of 10 gig workers say that they've been denied a loan, even if they were in good financial standing, right? And so we look at that and we say that's a huge number excluded from access to credit and capital. So one of the main numbers would be how do we elevate the number that have access to capital, right? I think that's the baseline that you would want as an indicator that you're looking for. Um, and then you would want to look for indicators that made sure that all areas of all demographics were elevated simultaneously, right? And so you'd want to make sure that you weren't leaving any sector, any job sector, any group of people out. And so I think those would then be your next indicators.
I should have said at the start that this is a very difficult aspect of measuring those people and social, and the fact that you've explained it perfectly, where a number of organizations would tend to say, oh, it's difficult to measure employees' purpose and motivations, for example, and so we don't measure it. And so a lot of companies will go down because it's difficult, don't measure it. And I know people have written books around the danger of just going to the things that you can easily measure. And so I share that to highlight how essential, even though it's a very difficult task, but you are making the attempt. And so it needs to be applauded heavily.
They say if you can't measure it, you can't manage it, right? And it's a lot easier to say, "Oh, like, we hope that this makes an impact." But there's an argument that, I did marketing for a very long time, right? And you say you've got social ads, which you can measure impact very easily. You obviously know you've got, your cost per click, then you've got, the user journey, and you can see who ticks down and how much it costs you. And then you have brand awareness, which is something where it's very hard to measure, but you do try and find ways to measure it, because if you can't measure it, you can't manage it. So I am a very big believer in data and to making sure that you've got your KPIs and your impact measurements, and that you try and understand what you're doing and solving.
What can enterprise sustainability leaders or enterprise ESG leaders learn from entrepreneurs like you who are working at the edges of access and inclusion that they may be able to use as a transferable skill in other sectors?
Yeah, I mean, I feel like right now the work that I'm doing is obviously in AI. And so the big lesson is AI is an incredible tool, but any leader who's looking at including it, I think needs to, from the very start, look at how they're doing it in an ethical and unbiased way when putting it into any system, right? Like my company has a code of ethics that we worked on together from the very start of how we were going to build our product. that all too often, and this just is kind of with any innovation or any product or any development, you can race in because you're excited. But if you don't have that from the start, there can be, downwind consequences. And, that can happen even when it's unintentional. But the more you try and think forward with that, the more you try and put in your frameworks that have standards, your ethics, your values at the forefront, the better your technology and your product and your enterprise will be.
In terms of selling the idea of this inclusion, not necessarily selling, being able to advocate essentially for this inclusion and the gig workers. How important do you think the ability to tell stories or the ability not just look at the data, but be able to interpret all of these challenges in a way that the message gets home and not just focus only on the data, perhaps with your previous background with the journalism of telling stories, how important. Perhaps I'll give you a background where sustainability in general, we have not been very good in some areas like the climate change, where it can be, some will call it alarmism, where we just alarming. And yes, the truth is there, but how you present it to make it more inspiring, to present it with, here is the problem, but by the way, we have the solutions to deliver it. So I'm curious to know any lessons there for the sustainability audience.
Yeah, I mean, I am a huge believer in stories, right? Stories are the foundation of societies. And so if I look at in a broad picture, when I look at how to tell stories, I always start with make it personal, right? Because especially as a company trying to solve a big problem, it's personal to someone, right? It's either personal to the founder, the people that it's affecting. So, all solutions start personally. And then you bring them out and you tell that story in a way that impacts it hits the problem, it makes you feel emotion, and then it solves your problem, right? And so storytelling for any enterprise or for founders tackling, new innovation is your number one tool in your toolkit. And I always say you have to include data in your story because data is where, emotions meets fact. And therefore it helps realize your impact and your conversion.
In the next 3 to 5 years, where do you see your sector evolving, or what innovations, opportunities are coming up within the Empower or the financial inclusion sector that excite you or you are intrigued about it?
I mean, one, AI is so new in the financial industry. It's so new, it's at the cusp. So, my hope is that AI is something that's really embraced in the next 3 to 5 years, which I know it is. It's going to be because like it's already being adopted rapidly and consumers are showing you that they want it, right? They want smarter, they want more personalized, they want experiences that are faster and more easy to access. So I know that. What I hope is that, and it's something that we're working on at Empower, is that we find a way for this AI revolution to use less energy, right? So what we can start looking at is how do we make our queries, our systems smarter but use less storage, right? Use less energy, and that comes down to like the energy, the carbon, the water that's used in order to make these incredible AI agents work. So I see a world where we've adopted it in hopefully an ethical way, and that we've also figured out how to minimize the footprint of the energy and water consumption that we're using.
What are the next 12 to 18 months goals that excite you, that you're looking forward to?
In the next 12 months, we'll be rolling out our version 1. So users will be able to go on and use it. And so, like I said, it helps access to capital, but also our agentic technology helps with smart budgeting and financial fluency, which is very important. It's that whole picture of how do you financially flourish. And so we're going to be doing that. And so yeah, if you would like to follow along, if you would like to come try it, you can sign up for the wait list on our website, Empower Money, so MPWR.money, or you can connect with us on LinkedIn. You can DM me on LinkedIn. I'm happy to tell you more.
What is your final thought based on the conversations that we've had so far that you want to leave with the listeners and those who are watching?
Yeah, I think there's two things that I could leave you with. Is one is we're at a really exciting time for innovation and to do smart innovation, right? And I that's where I talked about like we can do AI and we can try and do it in a sustainable way. So we're thinking of multiple things, right? The triple bottom line. You don't have to have just one outcome. You don't just have to have financial inclusion. You can create something that does more. And two, we can think more interestingly about how we include people into the financial system. And there's new ways to do that. And so one of the things that helps innovators is trying new products, right? So make sure that they're trusted, they're secure, that like all of those things, but try new things and be on the lookout for new innovations that you can say, "Hey, does this work for me?" Because there's people who are coming up with new products to solve great problems, but it is hard to get the word out there, right? So we'll first try things and then also spread the word if you do like something, because that helps innovators.
Huge thank you to Tamara for your time and the incredible insights for sharing this financial inclusion aspect. And it's always nice to get those ideas and the link between those inclusion and equity aspect of the finance, which links to people and then from people links to the environment. So thank you so much. And also thank you to the listeners and those watching. If you found this episode useful, please subscribe and share it with someone who benefit from this conversation. So yeah, thank you so much, Tamara.
Thank you. I love this conversation. Thanks for having me on.
Okay, that's great.